My name is Oliver Gajda. I'm the Executive Director of the European Crowdfunding Network. I'm extremely happy to speak here today, and even though I'm not in Budapest, but in Budapest, because like Nora, I have fond memories of a city quite a few decades back, which was very exciting and was changing at the time, and it has developed to something I think you can be proud of today. And so I think there is the possibility in Hungary to do good things and to develop things. Sometimes it gets a bit slower. I want to talk to you about two things: on regulation, on crowdfunding regulation, and sustainable finance. And I try to make the link between them. They are not initially on purposeful link, but there is a reason why I think these two topics are really important to look at today. So let me see. First of all, the European Crowdfunding Network, established in 2013, so just around the time when crowdfunding really first was noticed in policy in Europe. We're focusing on promoting transparency, self-regulation, best practices, and basically establishing the crowdfunding industry within the space of alternative finance. We are engaging in policy discussions with policymakers in Brussels, or if needed, also on national level. And of course, we try to educate the general public, but specifically the stakeholders that are relevant in making decisions on crowdfunding, on the importance of crowdfunding, what it can do to entrepreneurship, to SME finance, but also in kind of changing our way how we deal with financial services in general. Today, we have roughly 80 members, from crowdfunding platforms to local authorities. We engage with our members in specific working groups that are, have sectoral topics that they either develop policy statements on, or where we develop training activities in order to help crowdfunding platforms and markets to create knowledge, general knowledge that can be shared with investors and SMEs alike. We are represented throughout the EU, not every member state, but quite a few. And we also work, if you want, on EU finance projects, tenders and proposals that we find are significant to our members and our own policy development in order to help the Commission create a better understanding. And then, of course, that leads to policy actions later on. We are currently around 8 team members. And let me move on and really quickly introduce the story of crowdfunding for what I need to here to say. So crowdfunding is an emerging alternative form of financing. It's emerging and it's alternative finance for now. And it's to raise funds directly from people that are interested through the internet. The relevance of crowdfunding, this is data from the Cambridge Center for Alternative Finance. I'm not that interested in the figures. I want to show you the trend, the growth rates in 2012, a market of 66 million, in 2017, an estimated 1.6 billion. So we see significant and steady growth across the European Union. And we see that on the right-hand side, we have different types of crowdfunding that are all participating in this growth, some more than others, but they all remain significant, from donation-based to reward-based, lending and equity. We will talk a little bit more about lending and equity today, because that is where regulation will be applied. Crowdfunding is as old as humanity. We have other forms of collaborative finance, but the first kind of crowdfunding platforms we remember was started on the internet around 2006, plus minus. But it was the financial crisis of 2008 that created the understanding of market failure in typical financial services. The incumbent banks were no longer serving small enterprises. They had no money left to allocate to risky investments, and even business angels and venture capital that is usually touted as the way for innovation were of course not broadly investing into everything. They were really cherry picking in those sectors that they thought had the best growth opportunities. So crowdfunding saw an opportunity. People launched crowdfunding platforms, and many that were launched in those days, 2008 to 2010, are still alive and have developed quite nicely. It's around that time, 2010 to 2012, where crowdfunding also became visible to policymakers. And Nora already said so, the first regulation or the first attempt to regulate was in the US in 2012. The first regulation in Europe was in Italy in 2012, with other member states like the United Kingdom, France and Germany following. And today we have some 16 member states, I believe, that regulate crowdfunding specifically on national level. The European Commission was very quick to pick up on this trend and already in 2012 urged member states not to regulate, but jointly to work on a harmonized regulation across Europe, but to give the market time to grow. So by 2017, the Commission in only 5 years had worked with the market, understood the threats, understood the needs, worked with member states, and was able in early 2018 to make a proposal for a regulation of crowdfunding across all EU member states. This was then called ECSP, European Crowdfunding Service Provider. On the path there, they identified in a study that we were involved in, but also through a lot of other activities with other market players, a number of barriers that they hope that they can ease with this regulation. This is true for national markets, but even more for transactions from one country into the other, so cross-border transactions. Market barriers due to digitalization, lack of trust, issues around data privacy, difficulties of identifying people electronically, and the readiness of the user to make investments to a digital device. This leads to increased transaction costs in order to gather information, to measure your impact, and also to make a market to onboard new clients. Still today, a really significant cost for any crowdfunding platform. And on the regulatory side, because Europe was at the time 28 member states, now 27, and you have 27 different applications of laws to crowdfunding. Interpretations of EU laws, national laws, differences in national laws and EU laws that are not, that you can't resolve within the application of crowdfunding, created some member states to create bespoke regulation for crowdfunding, the EU to develop their view on legislation, but until then, the existing legislation had to be applied. And then incumbent national laws that may not have been written for crowdfunding still would have had an impact on crowdfunding. And it was creating initially quite a large amount of uncertainty, which I believe is what also Nora still experienced in Portugal, of course. So the ECSP, I will not go into detail. It's far too detailed for this, but what it means, what it will match, will regulate is business funding interests. So companies that raise funds from investors through an internet platform. And it will do this for the facilitation of granting of loans and transferable securities, usually equity. Plus, and this is quite important, admitted instruments, which is not a term in financial language. This plays reference to some financial structures in individual member states that do not fall under European regulation for transferable securities, but where the member states have an interest to place them under this regulation. This is in particular the case in Germany with subordinated loans. It's similarly in Spain, and it exists in some other countries as well. So these member states now, if they want, can apply to the European Commission to have these instruments regulated under this new regulation. What the new regulation will not apply to, and this is also quite important, is crowdfunding where the funder is a consumer, the receiver, the fundraiser is a consumer. So if it is not a business, but if it is a consumer loan or some type of consumer transaction, the regulation will not apply, and this will continue to apply under national law. Other services that could be defined as crowdfunding, but only in accordance with national law. Exceptions may exist where you could do something in specific countries that is not covered by European law. This will not be touched. And this is a positive thing. The last one is any transaction above 5 million euros per 12 months. This is a significant amount that can be crowdfunded now. Every startup, every SME can raise up to 5 million euros every 12 months through crowdfunding. So this is where we have already introduced the prospectus directive a few years ago, which became the prospectus law, and crowdfunding was given more room to play of up to 1 million euros. And now it's 5 million euros across Europe, which should give the possibility to also finance significantly amounts to high growth businesses, to SMEs that are a bit more meaningful and established already, and therefore also enable platforms to scale and develop their business. So this is quite exciting. In general, the new regulation covers what you would expect any regulation that is relevant to cover: organizational and operational requirements of crowdfunding platforms, the supervision and the authorization of such platforms by national competent authorities, investor protection, how crowdfunding platforms can communicate about financial offers, marketing and communications, who are the competent authorities and what they need to do, including data collection on the market, feedback to the Commission, and also penalties and other measures that competent authorities can apply to crowdfunding platforms. Quite important. That hasn't been the case in every market so far, and we've seen some cases where we wish these kind of things had happened. Two, I want to just outline very quickly: operational requirements. This is effective and prudent management, due diligence requirement, individual portfolio management of loans, complaints handling, conflict of interest, client asset safekeeping, and prudential requirements. These are all aspects that are already regulated in existing European laws. And within this law, or this regulation for crowdfunding, there are either specific carve-outs for crowdfunding that can be then used by crowdfunding platforms to not be fully regulated by yet another regulation that is meant for banks, but at the same time to be, put into a place where they have requirements, for prudential management, where they know what type of due diligence they must deliver. So it is basically providing from existing regulations the best ideas that are suitable to crowdfunding, and carving out some space for crowdfunding where otherwise regulation would maybe make it too expensive or too complicated to operate crowdfunding platforms. The other aspect is, of course, the investor protection, which we believe is very important, which not always is the first thing on the mind of fundraiser or a crowdfunding platform per se. But if you want to create a sustainable long-term business and a market, you need to, of course, think about your investors. So the information that is being provided is being defined by this regulation, including key investment information sheets, so small papers that detail information from the business plan, which can be done on individual transaction or on platform level. Also, default rates, not something every platform wants to publish, but they will have to do this under the regulation. And the last point here, a bulletin board, is basically a compromise on a secondary market, which under European law is not really wanted to be operated by a crowdfunding platform. But a bulletin board would allow investors to sell their interest in crowdfunded businesses to other investors on a crowdfunding platform. It's a simple measure, but it's a good start. All of this will be reviewed within 24 months. So in 2 years' time, or 3 years' time, 2 years once it comes into effect, we may see adjustments to this. Our expectations is market growth and increased competition, and hopefully, develop a market prices that is positive for fundraisers and SMEs, because crowdfunding can be, in some models, quite expensive. We expect a professionalization of crowdfunding leading to trust. Holders of this regulation will be supervised by the conduct authorities and will be subject to quite stringent pan-European rules that should enable investors to feel that this is a more trustworthy business than maybe it was 2 years ago in some other countries. We expect market consolidation, and we expect some large players that will have a generic approach, but then also expert players with a vertical or geographical niche, be it Southern Eastern Europe or be it sustainable finance. This is something that is very likely to come. We believe that there will be higher liquidity, especially in EU member states that don't have a thriving venture capital or business angel market, or not yet crowdfunding. And of course, for the first time ever, investment opportunities in small and medium-sized enterprises across Europe for citizens. That has not existed before. What does this have to do with the sustainable finance topics or the European Green Deal? I will very quickly introduce this. We had a conference. You can watch it online still. There's a link on our website. 3 days, each day 3 hours. May not be of interest to everyone, but the European Green Deal is basically the European Commission's priority for the next 5 years. And the main goal is to make Europe climate neutral. So no net emissions of greenhouse gases, no economic growth that is linked to the use of traditional resources like oil. So you need to find business models that do not rely on the exploitation of the earth. And nobody and no place should be left behind, i.e. people in Paris should be impacted by this as much as people in northern Sweden. So this is of course just a vision, but this means that there will be a lot of political activity and a lot of capital moving into this. Europe is supposed to be sustainable, and the Sustainable Finance Action Plan of the European Commission was developed in March 2018, so at the same time when crowdfunding was as a regulation was put forward. And this is where we have, and other speakers will talk about this, the ESGs, environmental, social, and governance considerations when making investments. There has been a taxonomy written around this, which has been agreed by the member states in 2019, which classified for financial services how these 3 aspects have to be measured in every investment. And it will not be a law for now, it will be a soft approach, but it will be implemented by the largest investment bank in the world, I believe, certainly in Europe, the European Investment Bank and the European Investment Fund, which in turn finance so many fund of funds, banks, and other investment managers that will be obliged to adhere to the same rules that this taxonomy prescribes. It's similar to the Sustainable Development Goals, but really specific on finance. Now, this is not applicable to crowdfunding and has nothing to do with the crowdfunding regulation we spoke about earlier. But while crowdfunding now moves into a European regulated space and wants to grow, there will be more and more kind of opportunities for larger institutions to also co-invest on crowdfunding. And so we expect that there's a drip down effect that will happen within the short term into crowdfunding. Specifically, the European Investment Fund has already invested and is open to invest up to 5 million euros per crowdfunding platform into the operation of the crowdfunding platform. So this is a finance into the platform operator. In general, the investments will be smaller. It runs under the Easy Financial Instruments, which is funded by the European Commission, but managed by the EIF. And it's directed at crowdfunding platforms that have a clear impact or sustainable finance focus. 2 platforms have already received investment, One Planet Crowd and Lighter Co. We had them speak at our conference. You can listen to their experience. And we also had the EIF explaining what their aim is here. This will be rolled out further, and they expect to see more platforms in the near future. And the European Investment Bank is in general open to consider fund investments to support crowdfunding. They already have invested in IFM regulated fund structures linked to crowdfunding platforms, like in October, France, it's a lending platform, but they're willing to go a step further, and we should expect that within 1 to 5 years, there will be dedicated structures that they either set up or invest in that will then provide liquidity to crowdfunding platforms. And here again, likely linked to the taxonomy around the ESG. So what do we expect from the ESG and a little bit also from the regulation that comes from the crowdfunding regulation that is coming now up? The impact is, of course, that the focus on sustainability, we already noticed in crowdfunding platforms. So focus on renewable energy, focus on social investment quite strongly. We even see a strong vision on real estate, which more and more is regulated towards the ESGs as well. So even there we will see an impact. But we believe that once we have a European regulation and platforms that operate under the same professional standards, we will see also standardized approaches to ESG by crowdfunding. So there will be an agreement within the industry of how to deal with this. We believe that transparency, open data might be a step too far, but transparency will have to increase again on the demand of large investment on donor organizations. The new regulation already requires platforms to be more transparent, but it will go a step beyond this because there will be questions from civil society to crowdfunding platforms. So we will see more performance data being published by crowdfunding platform, making data gathering and analysis more meaningful. And we will see professional standards that will be tightened under ECSP, under the new regulation, extend to industry-led best practices as we see market champions develop over the next few years under the new regulation. They will want to ensure that even better rules are set out in order to safeguard the industry that is being built. And so this is something we will also see. And then in the end, combining this with the regulation, of course, we will see cheaper access to capital for SMEs through crowdfunding. And we will see that crowdfunding becomes actually a market maker for growth and a better fit for the capital needs of small current enterprise, innovative enterprise, and even medium-sized enterprise that are still reliant on bank loans to a large degree. And ESG might be a driving aspect of this if the European institutions can engage with the crowdfunding sector earlier than not. So these are our expectations. This is my short keynote, which is probably only 2 minutes of three too long. I say thank you. I'm still here. I don't know what Nora's plans are, if there's questions. And I have to stop my slide share. So thank you.